Good morning. Here is today's Korean economic news briefing. We begin with growing concerns over geopolitical tensions and their profound impact on our economy. Vice Prime Minister and Minister of Economy and Finance, Koo Yoon-chul, stated yesterday that the Middle East conflict is expected to persist for more than a month, necessitating the formulation of a supplementary budget based on a 3-month horizon for stability. This signals the government's recognition of a prolonged period of uncertainty and its preparedness to deploy fiscal measures to mitigate economic shocks. In a related move, the Ministry of Economy and Finance has proactively established a nationwide supply chain bottleneck hotline. This initiative aims to address potential disruptions in import, production, and distribution caused by the Middle East situation by receiving real-time feedback and pushing for regulatory improvements. This demonstrates the government's commitment to maintaining economic resilience amidst external vulnerabilities. The direct consequence of these geopolitical risks is already being felt in rising international oil prices, which now threaten to influence domestic monetary policy. Analysts are increasingly suggesting that the Bank of Korea may consider an interest rate hike as early as July in response to persistent inflationary pressures and financial instability. This comes as the national fiscal health faces scrutiny, with the government's 2025 fiscal year budget reporting a managed fiscal deficit of 104.2 trillion Korean won, marking the third consecutive year over 100 trillion won. With the national debt to GDP ratio nearing 50%, there's a strong call to avoid using supplementary budgets for unnecessary populist spending, highlighting the delicate balance between crisis response and fiscal prudence. Reflecting these anxieties, Korea's Economic Sentiment Index has fallen to its lowest level in 11 months, underscoring widespread concern among the public and businesses. In a bid to proactively counter the energy crisis stemming from rising oil prices, the Ministry of Climate, Energy, and Environment announced that major conglomerates and financial institutions, along with 50 companies in energy-intensive sectors like petrochemicals, refining, and cement, will voluntarily participate in energy-saving measures, including a car-free day system for public parking lots starting today. Turning to domestic monetary policy, this Thursday, April 10th, marks the final Monetary Policy Committee meeting to be chaired by Governor Lee Chong-yong of the Bank of Korea before his term concludes. While the market widely expects the benchmark interest rate to be frozen at 2.50%, the escalating geopolitical tensions in the Middle East, surging oil prices, and inflationary pressures are casting a long shadow, making any policy shift challenging. The focus will largely be on Governor Lee's post-meeting press conference, where he may offer insights into his 4-year tenure and the future direction of monetary policy. The incoming Bank of Korea governor will face the critical task of navigating a complex global environment, influenced not only by domestic factors but also by the monetary policy stance of the U.S. Federal Reserve, whose March FOMC minutes are also said to be released this week. In the financial markets, despite the positive news of Samsung Electronics' record-breaking first-quarter preliminary earnings, which briefly pushed its stock value, the broader Kospi index showed mixed performance yesterday, ultimately closing higher due to foreign buying, while the KOSDAQ fell. The initial surge was tempered by profit-taking and lingering uncertainties surrounding the Middle East conflict and U.S. political rhetoric. The prospect of higher oil prices impacting corporate profitability and consumer sentiment continues to fuel market volatility. Meanwhile, LG Energy Solution announced its first-quarter revenue of 6.5 trillion won, alongside an operating loss. However, the company projects the first half of the year as a low point, anticipating a rebound in the second half, driven by its energy storage system business, particularly in data center demand. This suggests a strategic shift towards high-growth areas despite immediate headwinds. In a bright spot amidst geopolitical uncertainties, the Hanwha K Defense, Shipbuilding, Nuclear Fund has surpassed 100 billion won in net assets, just 8 months after its launch. This remarkable growth is attributed to increased investment demand in sectors seen as resilient against geopolitical risks, such as defense, shipbuilding, and nuclear energy, a direct reflection of current global conflicts. The real estate market, meanwhile, is showing clear signs of cooling. In March, the proportion of surge deals for Seoul apartments, where prices rise from the previous transaction, plummeted by 7.6 percentage points to a 7-month low. This sharp decline is largely attributed to multi-homeowners rushing to offload properties before the capital gains tax grace period expires on May 9, leading to a flood of urgent sales. This trend highlights a significant shift in buyer sentiment. The divergence between the Seoul and provincial housing markets continues to widen, with the apartment quintile ratio reaching 14.6 times since the current administration's inception. While Seoul's housing prices have climbed, provincial areas, especially the 5 major metropolitan cities, have seen stagnation or even decline, raising concerns about deepening asset inequality between capital and non-capital regions. Adding to the subdued outlook, the April apartment pre-sale forecast index experienced a drastic drop, reaching its lowest level since January 2023. This decline is a direct hit from the twin pressures of the Middle East conflict-induced economic uncertainty and stricter loan regulations. The Seoul apartment subscription market has also lost its vigor, recording the lowest first-quarter competition rate in 13 quarters, primarily due to a lack of new Gangnam area offerings, historically a strong driver of subscription rates. Interestingly, some non-Gangnam properties are now seeing higher pre-sale prices than certain Gangnam developments, indicating a distortion in market dynamics. On a more forward-looking note, in the realm of industry and technology, the Ministry of Employment and Labor is launching a challenge to identify and disseminate excellent cases of smart safety technology, utilizing AI to prevent industrial accidents. This initiative aims to leverage cutting-edge technology for worker safety. Following the surge in oil prices, battery market research firm SNE Research has revised its forecast for global electric vehicle penetration this year from 27% to 29%, with further increases expected in subsequent years. This indicates a potential rebound in EV demand, driven by consumers seeking alternatives to internal combustion engine vehicles. In other AI-related news, Ulsan City is investing 38.2 billion won to establish an AI ship equipment verification center. This strategic move aims to enhance the competitiveness of autonomous and eco-friendly ship components, aligning with stricter international maritime regulations on greenhouse gas emissions. Meanwhile, OpenAI has proposed a series of policies for the superintelligence era, including a robot tax, a 4-day workweek, and public funds. These proposals aim to manage the societal impact of advanced AI, focusing on employment, re-education, and ensuring that efficiency gains benefit workers. However, with the rise of new technologies, caution is warranted, as evidenced by the doubling of investment fraud cases involving drones and AI over the past 2 years, underscoring the need for vigilance against illicit schemes. In conclusion, the Korean economy is currently navigating a period of heightened uncertainty, largely driven by geopolitical tensions in the Middle East and their reverberations on oil prices and global supply chains. This external environment is putting pressure on domestic monetary policy, with the Bank of Korea facing difficult decisions amidst persistent inflation concerns and a challenging fiscal landscape. The real estate market is clearly signaling a slowdown, influenced by both regulatory changes and a weakening economic sentiment. On a positive front, strategic investments in defense, electric vehicles, and AI-driven industries show promise for future growth, but prudence is advised regarding speculative investments. For investors, vigilance against market volatility is crucial, with potential opportunities in sectors benefiting from current global trends like defense and sustainable energy. However, the risk of higher interest rates and a cooling real estate market demands careful portfolio management. For general viewers, these developments mean continued inflationary pressures, particularly on energy costs, and a need to monitor household debt and the evolving dynamics of the housing market. Government efforts to stabilize supply chains and manage fiscal health will be key in mitigating the impact on daily lives. That concludes today's Korean Economic News Briefing. Thank you for listening.